Good morning, everyone.
Good morning, sir.
Okay. So last week we couldn't finish our lecture. We talked about budget classification according to period last week. We said we classify budgets into three according to period. We said short-time budgets, medium-time budget, and long-time budgets. And we try to differentiate them. We said short-time budget, there are those budgets that covers a period of 12 months, and they are used for the implementation of strategic plan. We mentioned that. We said short-term budget is also used by government as part of the Appropriation Act. Government use short-term budgets as part of Appropriation Act. So every year, government normally prepare their budget called Appropriation Act. This budget is a short-term budget. It is the budget that is used to run the working capital of the government. So we talk about that. We also mention medium-term budget. We talk about medium-term budget. What is medium-term budget? We said medium-term budget, they are the budgets that range from 3 years to 5 years. Example of medium-term budget is medium-term expenditure framework. In Nigeria, we have medium-term expenditure framework. This medium-term expenditure framework, it shows the summary of the budget. It shows the summary of the annual budget, which is the short-term budget for the next 3 years. It is from the medium-term expenditure framework that we extract the short-term budget. So this medium-term expenditure framework must be prepared in line with Section 11 to Section 17 of Fiscal Responsibility Act 2007. So, and this medium-term expenditure framework, it shows the projection of government revenue and government expenditure for the next 3 years. That is what a medium-term expenditure framework is talking about. And we have content of medium-term expenditure framework. What are the content of medium-term expenditure framework we have? One of the content of medium-term expenditure framework is macroeconomic framework. There's a content called macroeconomic framework. It's a content of medium-term expenditure framework. It's one of the contents of medium-term expenditure framework. Macroeconomic framework. This is one of the content of medium-term expenditure framework. So another content is called fiscal strategy paper. Fiscal strategy paper is also one of the contents of medium-term expenditure framework. We have another one called revenue framework. We have expenditure framework. This is part of content of medium-term expenditure framework. We have consolidated debt statement. Consolidated debt statement too is one of the content of medium-term expenditure framework. While the last content is called statement on contingency liability. Why the president or the governor want to present medium-term expenditure framework to the National Assembly? He must attach all these documents I mentioned: macroeconomic framework, fiscal strategy paper, revenue framework, expenditure framework, consolidated debt statement, and statement on contingency liability. So these are the content of medium-term expenditure framework. Now, we mentioned last week again that what are the risks associated with medium-term expenditure framework. One of the risks that can affect the revenue, the projected revenue or projected expenditures of medium-term expenditure framework is persistent oil price decline. Drop or crash in the price of crude oil. Once the crude oil crash, government will not generate or royalty on crude oil and so on like that. Government will not generate revenue from that. Another one is non-oil revenue risk. What are the non-oil revenue risks we have? Like
Good morning,
delay in remittance by government. So you want to ask a question, you can go ahead.
sir. I've sent a message before raising my hand. All of these contents you were talking about, can you please just give a brief explanation of them? The macroeconomic framework, fiscal strategy.
So
I said,
non-oil revenue.
brief explanation of each of the contents you first explained.
Okay, the brief explanation. So I will.
PSAF. Can you get me, sir?
That please, I will still let me finish. I will explain that. What are the risks associated with oil revenue risk? We have mentioned that persistent oil price decline, emergence of what are the so we have explained the risk associated with medium-term expenditure framework. We have explained that. So your question now is I should explain the content one by one. So this content, fiscal strategy paper, means what government strategy government want to use to realize revenue. This is fiscal strategy paper. What strategy government want to use to ensure that there is stable economy is the fiscal strategy paper. Macroeconomic framework. What are the objectives of government? What are the major achievements government want to achieve in the next 3 years? Are we going to construct a Lagos Coastal Road? Are we going to subsidize medical expenses? Are we going to increase the VAT? They are the macroeconomic framework. Can you hear me?
Yes,
Hello?
I'm hearing you. I'm hearing you. I can hear you.
So all these are what? The macroeconomic framework. Consolidated debt statement means what are the public debt we want to collect in the next 3 years? The projection of the debt we want to collect in the next 3 years. That is consolidated debt, public debt. Expenditure framework. How much do we intend to spend in the next 3 years in terms of recurrent expenditure and what? Capital expenditure. In the next 3 years, how much do we intend to generate in terms of capital revenue or recurrent revenue? All these are the content of medium-term expenditure framework. So I think your question has been answered.
Thank you, sir. Thank you, sir.
Okay. Yeah. So we have looked at the risks too of medium-term expenditure framework. We have mentioned some of the risks associated with medium-term expenditure framework. Let's look at another type of budget called long-term budget. Long-term budget. This long-term budget simply means strategic plan. They are the vision of government, what government intend to achieve over a long period of time. Example of long-term budget, Vision 2020. Government have set up a goal called Vision 2020 that by the time Nigeria reached year 2020, Nigeria will be one of the viable economy. Nigeria will be one of the top 20 economy in the world. But when we reached the year 2020, we couldn't achieve the goal. It's a long-time budget. Millennium Development Goal. This one was set in the middle 1990s, in the late 1990s. Around from this objective, Millennium Development Goal was set in maybe 1995. That by the time Nigeria, when we reach year 2000s, we need to achieve some key projects, some key viable economic projects, some development. We need to have 24-hour power supply, this and that. That is Millennium Development Goal. Government said that. They set the objective, but we couldn't achieve that due to some reasons. And another long-term budget is called Operation Feed the Nation. Operation Feed the Nation. This one too is a long-time budget. So we have looked at that too. So that is what we look at. Now, if you want to set a long-term budget, what are the steps involved in setting a long-term budget? This step involved in setting a long-term budget will be mentioned as follows. We need to identify the objective of government. You need to identify the objective of government. Once you identify the objective of government, this is objective we intend to achieve. Secondly, you need to search for alternative courses of action. If we couldn't achieve this objective, what are the other options that we have? If we couldn't use this money for this project, what are the other options that we have we can use the money for? You understand? We need to have alternative. Every plan in this life, every decision you want to take must have an alternative. You understand? You have to get alternative that in case this person fuck up, this is where I'm going to. You understand? You have to have alternative. And you need to gather data from various alternative courses of action, various options open to you. You need to gather data. You gather data from those various options. Once you gather data, the next thing you need to do, you evaluate the alternative based on the basis of cost-benefit relationship. You evaluate the alternative on the basis of cost-benefit relationship. What are the costs of the alternative? What are the benefits of the alternative open to you? You look at that too. And you select the optimum alternative option. You select the alternative that will be most benefit to you. Once you have done that, you can now formulate plan based on those alternatives. You can do what? You can formulate plan based on those alternatives. So once you have done that, another thing you need to do is another thing that you need to do another thing once you have done your formulation of plan, you need to monitor, you need to implement the plan. You need to implement the plan. You will implement the plan from the formulation of the plan. Implementation of the plan is the next thing. You now need to monitor actual results. After you have done that, you can respond to variance. These are the steps involved in formulation of long-term budget. So, ladies and gentlemen, today, again, we look at another classification of budget called classification according to budgetary system. How do we classify budget according to budgetary system? What are the classification of budget according to budgetary system? How do we classify that? We need to look at that today. When we are classifying budget according to budgetary system, we have zero-based budget. We have activity-based budget. This one, we can call it planning program budget. Planning program budget. Planning program budget. So we have zero-based budget, we have incremental budget, we have top down and bottom up budget, we have planning program budget system. So, but today I want to look at incremental budget. I want to look at incremental budget. That is what we want to look at today. Incremental budget. What do you understand by incremental budget? So what are the steps involved in incremental budget? That is what we want to look at today, and we solve question on incremental budget. After that, we can look at the various aspects of budget. So incremental budget simply means a budget system, a budgetary system where budget is prepared using previous period budgets or previous period actual performance. Incremental budget is a budget system where budget is prepared using previous period results or previous period actual performance. As a base for preparation of what? For preparation of future budget. For preparation of big future budget. Incremental budget, like I said, is a budgetary system where a budget is prepared. This budget that is prepared, we use previous period results or previous period actual performance as a base for the preparation of what? For the preparation of new budget. What is the key changes in incremental budget? What are the key changes in incremental budget? The key changes in incremental budget is this incremental budget is about inflation and level of activities. Inflation and what? Level of activities. What we are saying is the budget you prepare in 2021, you are going to follow the same pattern that you used to prepare budget of 2021 to prepare 2022 budget. But what is going to change there is the figure, the amount stated in the budget. And what is going to affect the amount stated in the budget is inflation rate, inflationary rate, and what? The level of activities. Inflationary rate and the level of activities. If we all know that the price of goods and services normally increase day by day. The amount that they are selling bag of rice last year is not what they are selling it now. It has increased. That is inflation. The amount that they are selling a new car last year is not what they are selling it now. It's because of what? Inflation. Inflation will affect prices of goods and services. And another thing, level of activities. Level of activities. This level of activities too is very important. What quantity do we use last year? What quantity are we using this year? That the number of quantity that we are going to use last year and this year, since they are different, is going to affect the budget too. It's going to affect the budget. So what incremental budget simply means is we want to prepare future budget. We are now using last year budget as a base for preparing the future budget. What is going to change there is the amount, and this amount is affected by two factors. What are the two factors that affect incremental budget? Inflationary rate and what? Level of activities. Inflationary rate and what? Level of activities. These are the major two factors that affect incremental budgets. Now, what are the advantages of incremental budget? What are the advantages of incremental budget? Incremental budget, the budget system is very simple to prepare. Incremental budget is very simple to prepare. We can prepare it very simple. Since we are using the format that we used last year, the template that we used last year to prepare it, all what we need to do is to change the figure. So it's very simple to prepare. Another one is it is a means of expenditure control. We use it to control our expenditure, to cut down our costs. That is one of the advantages of incremental budgets. So incremental budget also ensure protection of finances of the organization. Incremental budget also ensure protection of the finances of the organization, of an organization. So it's one of the benefits, one of the advantages of incremental budget. Why another one is it is also easy to make detailed comparison between budgets and actual revenue and expenditure. In incremental budget, it will be easy for us to compare budget amount and actual amount. It is very easy for us to compare budget amount and what? Actual amount. Why doing this incremental budget? Now, what are the problems or disadvantage of incremental budget? One of the disadvantages of incremental budget is incremental budget focus on 1 year result alone. It does not look at future cost implication of the current decision. What we are saying is, if there is an error in the previous year budget, and we want to use that previous year budget to prepare the future budget, that means we are going to carry forward that error. So another problems of incremental budget does not provide little information on the nature or and level of services. Incremental budget does not provide little information on the nature and level of what? Services. This is also one of the disadvantages of incremental budget. So incremental budget also does not provide a meaningful way to evaluate trade-off between different services. Incremental budget does not provide a meaningful way to evaluate trade-off between different services. These are all disadvantages of incremental budget. I've explained them last week. I stopped here last week. I've explained them in more detail last week. So for the sake of time, I think we can look at a question. Let's look at question we can solve so that we can move to the next area of budget. If by God's grace today we finish budget. Let's start from question 2. Let's go and solve question 2 first before we solve question 1. So somebody should can help us read the question 2.
Question 2.
Question 2.
What is incremental budgeting system? For
Okay,
question
2B.
2B, the Ministry of Establishment of Calabari State provided the following information about its budgeted and actual overhead and personnel costs in respect of 2012. So please scroll down. The tables below, subhead, description, provision, and actual. Number 1, personnel costs, 1,650,000 for provision, actual 1,530,000. 2, travel and tour, 240, provision, actual 290. 3, utility services, provision 180, actual 160. 4, telephone services, provision 110, actual 140. 5, stationery, provision 510, actual 480. 6, office furniture and maintenance, provision 350, actual 290. 7, maintenance of motor vehicle, provision 470, actual 490. 8, maintenance of capital assets, provision 1,110, actual 940. 9, subvention and grants, provision 990, actual 900. So scroll down.
Okay.
Then staff training and development, provision 130, actual 110. 11, miscellaneous expenses, provision 770, actual 740. 12, contribution to foreign bodies, provision 430, actual 420. The following information is also relevant. 1, an inflation factor of 10% on overhead costs is to be provided for in the computation of 2013 budget. 2, increase in activities in 2013 will attract 15% of overhead costs. So scroll down. Three, 10% of total salaries for 2012 is required to meet the additional personnel cost in 2013. The personnel cost of the year 2012 includes 380 million spent on staff allowance. 4, the staff allowance will be 30% of year 2013 staff salaries required. Prepare 2013 budget on incremental system basis. Show workings.
Thank you. Now, we are asked to prepare 2013 budget on incremental basis. And we are told to show all workings. We are told to show all workings. We are asked to prepare the incremental 2013 budget. On incremental basis, and we should show all the workings. In this question now, we are giving 2012 results. What are the 2012 results we are giving? First, they gave us personnel costs for 2000. This is 2012 budget. The examiner is now asking us to use this 2012 budget to prepare 2013 budget. The question now is, we're giving provision. Provision means budget of 2012. We're giving actual. Actual means actual result of 2012. Now, if we want to prepare 2013 budget, which one are we going to use as a base for preparing 2013 budget? Is it the provision, which is the budget amount of 2012, or actual result of 2012?
Actual.
Actual.
Actual, because actual is more realistic than what? Than
A provision.
budget. Assuming we are not giving actual, we can use provision. Do we understand? Do we understand?
Yes, sir.
Assume we are not giving actual, we can use provision. Now, we start with the first one. The first one is personnel costs. This personnel cost now, personnel costs, the actual given to us is 1,530,000. How do we get that 1,530,000? Let's go to the note. There is a note that said, ladies and gentlemen, when you are doing budget for government, the budget for government, this is recurrent expenditure. All these items listed below, they are recurrent expenditure. They are what? Recurrent expenditures. So what we are saying in essence is, your recurrent expenditure, you can divide it into two: personnel costs and overhead. What we are saying is, this personnel cost is one of the recurrent expenditures on its own. Why from 02 to the last one, which is 12, they are all overhead costs. They are all overhead costs. Apart from personnel costs, we also have overhead costs. All the remaining one in the question, they are overhead costs. Now, what we are saying in an essence is, this personnel costs, what affect the personnel costs? Let's go and read the notes. Note 3 only affect personnel costs. They said 10% of total salary for 2012 is required to meet up the additional personnel costs in 2013. 10% of total salary in 2012 is required to meet up the personnel costs of what? 2013. This personnel cost of 2012 include personnel cost of 2012. It includes $380 million on amount spent on staff allowance. On amount spent on what? Staff allowance. $380 million spent on staff allowance. Now, let's go to the workings. Let's go to the workings. Personnel cost for 2012 is 1,530,000,000. When you remove the staff allowance, 380 million, that means the balance will be what? 1,150,000,000. 1,150,000,000. This 1,150,000,000, you now add 10% increase of it. 10% increase. increase. The 10% increase of 1,150,000,000 is 105 million is going to be added. That means once we add this increase, you have gotten the 2013 personnel cost salary, excluding staff allowance. In the question, we are told that in the note 4, they said staff allowance will be 30% of the year 2013 staff salary. What this one means is that 2013, this is the personnel cost, excluding staff allowance. This is the salary, excluding staff allowance. 30% of this amount, 30% of it is going to give us 379.8. When you add the 30% to it, that means your total personnel cost for 2013 is going to be 1,644,000.5. 1,644,500,000.
Please, I can't come again on how you got personnel cost. I'm so sorry.
No problem, no problem. Look at the question. How much is the actual personnel cost we have?
We have 1,530,000.
You know, they are in million. This means 1,530,000,000.
Okay.
That is for 2012.
Mm-hmm.
We want to use this to prepare 2013 personnel costs. What is the note given to us in respect of personnel costs? We were told that 10% of total salary for 2012 is required to meet additional personnel costs in 2013. The question now goes further by saying personnel costs for the year 2012, it includes 380 million spent on staff allowance. Personnel costs on 2012 include 380 million. That means out of that 1,530,000,000, there is a staff allowance of 380 million. In that case, you need to remove it. You need to remove that. 1,530,000,000. You remove the staff allowance, 380. That means the balance remaining is 1,150,000,000. 1,150,000,000 is the balance remaining. This balance remaining, for us to get 2013 personnel costs, excluding staff allowance, we are going to say 10% of this will be added to this amount. 10% of 1150, it will give us 115. We add it to the 1150. That means personnel costs for 2013, excluding staff allowance, is going to be 1,265,000,000.
Okay.
Now, what is the staff allowance for 2013? What is the staff allowance for 2013? What is the staff allowance for 2013? We were told that staff allowance for 2013 is what? 30% of the salary for 2013. That is the staff allowance. So the 30% of 1,265,000,000, the 30% of it, the 30% of it, how much?
379.5.
379.5. So when you add it, do you understand?
Yes, sir. Yes, sir.
So looking at the solution now, personnel costs for 2013, you can see Calabari State Ministry of Establishment budget for the year 2013. The personnel costs for 2013, you write it the same way: sub-head, description, note, amount. The personnel cost for 2013 is 1,644,050,000. After the personnel cost, what other item do we have? We have travels and what? Travels and tours. Can we see that? Can we see the travels and tours?
Yes, sir.
290. Can we see the 290? This 290 now, what is going to affect the 290? Note 1 and 2 affect overhead. Note 1 and 2 affect what? Overhead. An inflation factor of 10% on overhead costs is to be provided in the computation of what? 2013 budget. That means if you want to do 2013 budget, 10%, we need to add 10% to 2012 budget for inflation. Hello, can you hear me?
We can hear you, sir.
Hello, can you hear me?
Sir.
Okay.
Yes, sir.
Now, In 2012, travels and tour up to the last items, they are overhead. They are going to be affected by two factors. What are the factors that will affect them? What are the two factors that will affect them?
Inflation and incremental inactivity, increase in activity.
Increase in activity. That means if you want to do travels and tour for 2013, the actual amount is 290 million. Look at the workings. The actual amount, 290 times 110. This 110 means inflation. Times again, 115. This 115 means what?
Increase in activity.
Increase in activities. What this one means is that 290 is the 2012 budget. 2013 budget, 2013 incremental amount will increase by 10%. That means it's going to be 110 of the last year amount. Do we understand?
No, I need the 110%. Where is it in the additional information, please?
Lady, can you hear me?
I can
See,
hear you. The 115.
Look at 290. It's last year amount, Abi. The 290 is last year amount. If we are told that for us to prepare the next year is going to increase by 20% or 10%, that means we are saying that 290 times 110 for us to get the next year amount. Since it's going to increase by 10%, if it is going to increase by 20%, 290 times 120%, that means this next year budget is 120 amount of last year budget. Another way you can do, let me open an Excel. Let me open an Excel. Let me just open an
Sir,
Excel.
can you hear me? Can you hear me, sir?
I can hear you.
I said I got the 110%. It's the 115% I'm concerned about.
I want to explain it. I want to open an Excel sheet for better understanding. Let me do that. Let me open an Excel sheet. I will share the Excel sheet now. This is an Excel sheet now. Take, for instance, travels and tour. Can you see the Excel sheet?
Yes, sir, yes.
They said travels and tours. For 2012. 2012. Travels and tour for 2012. How much is the travels and tour for 2012? The actual amount?
It's 290.
290. They now said for 2013, it's going to increase by what?
10%.
10% inflation. If you want to do that for 2013, we can say, 290 10% increment. We can write increment like this. The increment, we can set 10%, Abby.
Yes, sir.
Can we see the 10%? That
Yes,
means
sir.
the total of 2013 budget is going to be 290 plus what?
Plus 10.
Plus 10. It's still
Plus
110.
10%.
Do you understand?
Yes, sir.
It's still 110. If you can get this 319 by saying 110 of 290. 110% of 290. Do you understand?
I understand. Why are we now multiplying it again by 115% is what I'm talking about.
They said 2013 budget is going to be affected by two things. First one is inflation. This one is inflation, 10%. Inflation of what? 10%. Second increment that will make 2013 budget to be increased. The second increment is what? Level of activities.
I've gotten it.
Level
I've
of
seen
what?
it. Activities. I've seen it.
Activity. Okay, you have seen it. So we can say how much is the increment of level of activities?
It's 15% in note 2.
Now, we will now say 15% of 319. 15% of 319. We now add it again. 319 plus 15%. Do you understand now?
Yes, sir. Thank you, sir.
So that is how we get 366.85. Utilities and service. How much do we have in 2012 budget? Actual. Utility service. How much do we have as an actual? We have 160.
160
If you
million.
go to your working note, 160 times is still overhead. It's part of overhead. 160 times 110 times 115. You will get how much? 202,000.4. Do you understand? The same rate will affect them. They are all overhead. Do you understand?
Yes, sir.
Another one. Same thing. Telephone service. Telephone service. 140 times 110 times 115. The other one, stationary. That means starting from travel and tour up to the last amount, they are all overhead. They are going to be affected by the same factors, the same inflation rates, the same level of activities. Ladies and gentlemen, in some other question, we'll be giving different inflation rates for travels and tour, different inflation rate for utility service, different level of activity for them. Do you understand what I mean?
Yes, sir.
In this question, the same inflation rate affects all the overhead together. The same level of activities rate affected all the overhead together. But in some question, in some another question, they will have different inflation rate that affect them, different level of activities rate that affect them. This question is a two factor. Two factors affect the budget. What are the two factors? What are the two factors that affect the budget in this question?
Inflation,
Inflationary rates and what?
increase in activity
Increase in
rates.
activity. In some question, you may have one factor, only inflation, or only increase in activities. Do we understand?
Yes, sir.
Do we understand? So at the end of the day, you will add all your budget together. You can see the working note. I did a working note on how I get them. So your total budget for 2013 is going to be 8,000. That is 8 billion 32,750,000 because they are in millions. That means 8,032.75. Do we understand?
Yes, sir.
Let's look at question 1. Let's look at question 1. You can read the question 1.
Question 1. The local development authorities of Ifedu Council agreed to transfer its cultural and social center for the purpose of adequate maintenance to the state government. The state government accepted to take over the centers and therefore requested for its 2017 budget. The following were supplied by the Cultural and Social Center to government through the cultural officer and the accounts department of the ministry. The actual salaries and wages and overhead expenses for 2016. Salaries 9,750,000, wages 8,420,000, rates 8,730,000, power stroke electricity 2,700,000. So please scroll up. Please scroll up, sir. Rent, 2,600,000. Artifacts for sale, 2.80. Security services, 1 million. Other supplies, 2.51. Service level agreement, 2.85. Promotion expenses, 2.01. So please scroll up, which gave a total of 25.20. Total expenditure, 43.37. Actual income in 2016. Admissions, 9.01. Sales in the center, 4.78. Other income, 1.48. Grant, 1. Total income, 16.27. Net expenditure, 27.10. Other details provided include 1. Salaries are made up as follows. Director, MOH, Social Officer, and total. Salaries, 4.80 for Director, Social Officer, 3. Total, 7.80. National Insurance, for Director, 0.48. For Social Officer, 0.30. Total, 0.78. So please scroll up. Pension, Director, 0.72. Social Officer, 0.45. Total, 1.17. Then the total for the 3. For Director, 6. For Social Officer, 3.7. Total, 9.75. The wages were for 5 employees known as cultural assistants, paid on hourly basis with maximum of 20 hours per week at 1,260 per hour, plus overtime bonus as follows. Cultural assistant, 20 hours per week, 1,260 per hour, 52 weeks. For salary, 1.31. Insurance, 0.131. Pension, 0.20. Total, 1.641. Cultural assistants, 8.205. Overtime, 0.230. Total, 8.435. The guideline for the budget has been given as follows. 1. Expenses. Rent to remain as at last year, since these would still be running for 2 years, but security service providers will charge only 0.6 million next year. 2. No festival would be planned for the following year, and as a result, there will be no promotion expenses and grants in the following year. 3. The same number of visitors would come to the center. The rate of admission fees will go up by 10% for the following year. 4. There will be an increase of 5% on other income. The budget for active art for sale would increase by same proportion as the sales in the center budget, which would increase by 20%. 5. Power/electricity and rates will increase by 8% and 2% respectively. Other supplies will increase by 2.5%. 6. Salaries and wages. There would be 2.6% increments wages, while the national insurance contributions will increase to 12% of salaries instead of the current 10%. And pension contribution will be 15% of salaries. Director MOH would not be due for salary increment, but social officer will earn annual increment of 0.088 million. There will be no overtime payment. The service level agreement is fixed at 2.948 million. You are required to prepare the budget for Ifedu Local Government Council Authority, Cultural and Social Center for the year ended 31st December 2017. Use same format as in the question, 20 marks. Thank you, sir.
Thank you very much. Now, we are asked to prepare budgets for 2017. We are giving 2012, 2016 budget. We are giving 2016 budget, and we are asked to do 2017 budget. We should use the same format. That means, look at the format of 2016 budget. The first write salary, wages, as they prepare it in 2016. That is how we are going to prepare it for 2017. All what we change is just the figure. All what is changed, what is going to change is what? Is the figure. Can you hear me?
Yes, sir.
Hello? Now, going to the solution now. The first item we are going to start with is what? Salary, Sabi. The second item is what?
Wages.
Wages. The third item is what? Rates. Me, I want to start from the rate. I will leave salaries and wages first, because that salaries and wages take a lot of time. I want to start from rates. What is the rate for 2016 in the question? The rate for 2016 is
8.73.
8 point what? 8.73. $8.73. This 8.73, this is for 2016. Now, you will now go to the note, the guideline of the budget. What is the note given to us regarding the rate? What will make the rate to change? What is the note given to us regarding the rate? Which notes affect the rate? Can we check round? Which notes affect the rate?
Note 5.
Where they mention anything on rates. Note 5. Can you see the note 5? They said power and electricity, power/electricity and rate will increase by what percentage?
8% and 2%.
That means rate is going to increase by what percentage?
2%.
Rate 2%. What that one means is rate for 2016 was 8.73. That means for 2017 is going to be 102% of 2016. 102% of 2016. You can do it this way. Look at it. Rate for 2016. Look at the solution. 8.730. Increment is how many percent? 2%. 2% of 8.730. It will give you 1.175. When you add it together, it will give you 8.905. Or you can set 102% of 8.73. It will still give you what? 8.905. That is for rate. We have done with the rate. If you look at it in the question, the rate 8.905. While you are solving this question, you write the heading, the Local Development Authority, the Federal Council, Cultural and Proposed Budget for 2017. So the rates, 8.905. That is the rate, 8.905. After the rate, go to the question again. After the rate, which one is next?
Power slash electricity.
Power slash electricity, Abby.
Yes,
Yes,
sir.
sir.
So what are we giving on power slash electricity? What is the note? What is the note on power slash electricity?
Same
That one
note,
will increase by what
5.
percentage?
8%.
8.8%.
So in that case, 8%, 8% of 2.7. Power slash electricity for 2016 was 2.7. 8% of it. That will give us 0.216. Can we see that?
Yes, sir.
When you add the two together, it gives you what? 2.916.
2.91.
Another way you can get it, you can set 108% of 2.7. Abby?
Yes, sir.
But you will also get it. So 2.917. That is for power slash electricity. The next thing, the next item in the budget, what is the next item after power slash electricity?
Rent.
Rent. What is the note on rent? What note do we have on rent? Note 1. So what is the note? They said what? Rent remain what?
As at last year.
Since the list will be running for 2 years. Abby?
Yes.
Yes, sir.
What that statement means? That means for 2017, how much rent are we going to use?
Same
2.60.
2.6.
2.60, the same amount. So if you look at the solution, rent 2.60. After rent, which one is next?
Artifacts for sale.
Artifact for sales. What is the note on artifact for sales? You will check around. What is the note affecting artifact for sales?
Note 4.
Read it out.
There will be
They
an
said
increase of 5% on other income. The budget for artifact for sale would increase by same proportion as the sale in the center budget, which would increase by 20%.
That means budget for artifacts for sale will increase by 20%, Abby. So artifact for sales for 2016, 2.8. Increment 20%. 20% of 2.8. That is 0.560. The total for 2017 is 3.36. Do we understand?
Yes, sir.
So we get that 3.36. We can see it in the solution, 3.36. After artifact for sales, which one is the next expenditure in the budget? Which one? Which one is the next after artifact for sales?
Security
Yeah.
services.
Security services.
What is the note on security service?
Note 1.
What is the note on security service?
One.
Note what?
1.
Okay. Read it out.
Security services providers will charge only 0.6 million next year, which is for 2017 budget.
So this one does not require any workings. We just go to the security service in front of it. We write 0.6 million. After security service, which one is next for the sake of time?
Other supplies.
Other supply. Are we giving notes?
Yes. Note 5.
Yes. Other supplies will increase by 2.5%.
So 2.5%. Other supplies. (2.5%) of the amount of 2.510. It will give you 0.063. That means the total other supplies is 2.573 for 2017. After other supply, which one is next?
Service level agreements.
So what is the note on service level agreements? What note do we have on service level agreements?
Note 6D.
So service level agreement is fixed as what?
2.948.
So in the question, just put 2.948 for 2017. After service level agreement, which expenses is next in the question
Promotion
according to the budget
expenses.
prepared? Promotion expenses. So what is the note so that we can know the amount we are going to use for 2017? What is the note? Note
There's
what?
no note.
Note.
Okay, note 2.
Note
It
2. Oh
says,
yeah, help us read it.
no festival will be planned for the following year, and as a result, there would be no promotion expenses and grants in the following year.
That means there will be no promotion expenses. Our promotion expenses will be 0. Promotion expenses, dash. Can we see that?
Yes, sir.
So you add all the expenses, all the expenditures together, starting from rates up to promotion expenses. When you add that, it will give you 23.910. We have not done salaries and wages. We are still going to look at salaries and wages. On admission income, what is the note that will affect the income on admission?
Note
Note
3.
Note 3,
admission is going to go up by what percentage?
10%.
10%. Last year admission income is how much? 9.01.
Mm-hmm.
10% of 9.01.
Mm-hmm.
This one will give us 9.911. After the admission, we have
Sales center, something.
in the center. So what is the note on sales in the center? What is the note?
Note 4, the
Note
sales
4.
in the center budgets will increase by 20%.
Sales in the center budget is going to increase by what? 20%. So 20%. Sales in the center. Sales in the center for last year, 2016, was 4.780. 20% of it will give us 0.956. That means the total amount is going to be 5.736. 5.736. That is the sales in the center amount. After the sales in the center amount, which one is next?
Other incomes.
What is the note on other income?
Note 4. There will be an
Read
increase
it
of
out.
on other income.
There will be an increase on what?
5% on other income.
Okay. So 5% of the last year amount. 5% of it. Other income for last year was 1.448. So 5% of it, and you add it. So how much are we going to get?
1.554.
1.554. Another one we should have, another income that we have is what?
Grant.
What is the note on grant?
Note 2. No festival would be planned for the following year, and as a result, there will be no promotion expenses and grants in the following year.
On grant. What is the note on grant? What note do we have on grant?
Note 2.
Oh yeah, help us read. Note is saying that there will be no promotion expenses and grants in the following year. Abi? That means there will be no grant. Grant will be 0. In 2017, grant will be 0. Can we see that? Are you with me?
Yes, sir.
So grant is 0. At the end of the day, the total income for 2017 is going to be 17.201. 17.201. That is the total income for 2017. $17.201. Now, let's go to salaries. What note do we have on salaries? This salary, what note do we have? The salary for last year. How much is the salary for last year?
9.78.
7.5 or 7.8?
Sorry, 7.5. 9.75.
So 7.5. So what note do we have on salary? Note 1. They said that 9.75. How do we get it? We are giving the breakdown. Look at the breakdown of how we get the 9.75. $7.80 salaries, insurance, national insurance, 0.78, pension, 1.17. At the end of the day, everything together is 9.75. Salary, this salary alone is going to increase. Pension too will increase. Insurance too will increase. So now, the salary alone, what is the increase in the salary? According to the notes. What note gave us how the salary increased?
Note 6.
Okay, read it out.
Note 6A. There would be, for salaries and wages, 6A. There will
Wages
be
is different
2
from
point.
salary in this question. Wages is different from salary.
Okay, for salaries, still that 6A.
Okay.
There will be increase to 12% of salaries instead of the current 10%.
That is insurance under the salary. Salary itself,
Yes.
if you look at note B, 6B, you know, there are two people collecting salary.
Yes, sir.
Director of MOH and what?
Social officer.
Look at the note. He said there will be, director of MOH will not be due for salary increment. Abi?
Yes, sir.
Yes, sir.
But social officer will earn an increment of how much?
0.088 million
0.088.
annual increment.
So go back to the solution. This is the salary for last year. The salary for last year is, I'm coming. the salary for last year. The salary for last year, 4.8 for director, 3.0 for social officer. And we are told so we are told that only social officer will receive increase in salary. Only social officer will receive increase in salary. Only social officer. Director of MOH will not collect increase in salary. That means salary alone for 2017 for director is 4.8. For social officer, 3 million for 2016 plus the increment. It will now give us 3.088. Do we understand?
Yes, sir.
That is salary alone. You know, in the breakdown of salary given to us in the question, after salary, what is next in the table given to us in the question?
National insurance.
National insurance. So what is the note on national insurance?
Note 6.
Note 6A.
Oh yeah, read it out.
12% increment for national insurance.
That means before, how much is national insurance rate? Instead of current 10%, I mean,
Yes, sir.
that means for that 2016, look at 2016 table. This table in 2016, which is the correct, national insurance is 10%, Abi.
Yes, sir.
Yes, sir.
10% of 4.8, you will get 0. What?
2.48.
10% of 3, you will get what?
0.30.
That is for the 2016. For 2017 that we are doing the budget, how much is the national insurance? Rate. How much? How much is the rate now? Is the rate increased from, Abi, is still 10%?
Increase to 12%.
That means 12% of what?
Of 4.8.
And 12% of what again for social officer?
3.08.
3.088.
So you will get it for director, his own national insurance will be 0.576. While for social officer, his own is 0.371. For pension, what is the rate of pension? What is the rate of pension?
%15 of salaries.
15% of salary. So this pension for 2017 is going to be 15% of what? 15% of 4.8.
Yes, sir.
For the
And
first one, 15% of 3.00
3.088.
for the second one. At the end of the day, when you add insurance plus pension, when you add it to the salaries, it gives you what?
6.096.
6.09.
Why the other one called
3.922.
3.922? When you add the two together, how much is it giving you?
For director, 10.896.
No, what I'm saying is 6.096 plus 3.922. That will, for that salary, that is how much? 10 point what?
10.018.
That is the salaries that we are going to use in the question. Do you understand?
Yes, sir.
We have done with salaries. Wages is the next. Wages is the next. How much is our wages in the last year? How much is our wages? In 2016, how much is our wages?
8.42.
How do we get, are we giving note on how we get that 8.42?
Yes, sir.
How do we get it? Look at how they get the 8.42. Though in the question, they write 8.42, but in their solution, in their note, 8.435, 8.42. They said they have, under the wages, they have 3 items under wages. Salary first, insurance, and pension. They now get the total. How many staff receiving wages? How many staff? How
5
many staff
employees.
receiving wages? Hello?
5 employees.
5 employees. Look at this question. Wages for one employee, total wages for one employee is 1.641. Total wages for one employee is what? 1.641. For 5 is going to be what? 1.641 times what? Times 5. 1.641 times 5. Somebody should help me. How much is that?
0.205.
Hello, sir. Why are you talking by 5?
These wages. Hello? 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 Yes, ma. Carol. Okay. 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 Time wo ni wọ́n máa gbé wá? Okay. Okay. No problem. Adúpẹ́ ma. Yes. Hello, can you hear me? Hello, can you hear me?
Yes, sir.
So, this wages is for 5 employees, but they first of all calculate for one employee. They add the insurance, they add the pension. The total wages for one employee is 1.641. That is the total wages for one employee, 1.641. For 5, 1.641 times 5, it will give you 8.205. Then now add overtime. When they add the overtime, they get 8.42, 8.432, but they use 8.42 in the question. Now, we are going to do the same thing. First, this 1.31 is going to increase. Insurance too will increase. Pension too will increase. Under the wages, this salary under wages 1.31, it was increased by how many percent? Look at my solution. You know, salaries, this 1.31 is for one staff. If I want to make it for 5 staff, what can I do? I will times it by what? I will times it by 5. Once I times it by 5, it's for 5 staff. Now, look at my solution. I said wages for one staff, 1.31, times 5. That means for 5 staff is 6.550. Now, what is the note on increment in wages? What is the note? What note do we have for increase in wages? If you look at note
6.
6,
Yeah.
oh yeah, that salary only is going to increase by what percentage?
2.60.
2.60. That is the thing. That means 2.60. 2.60. Now, after we get 6.72, you know, after under the wages, we have insurance too under wages. Look at the note under the wages. We have insurance too. In the note on how they get wages, we have insurance too. Abi, after the salary, we are giving insurance. Abi, do you understand?
Yes, sir.
Now, what is the new rate for insurance now? What is the new rate for insurance? The 12% is the new rate. 12% that you use for the salaries is still the new rate, Abi? Because last year was 10%. They say insurance has increased to how many percent? National insurance.
Sir, please, can you go back to the additional information 6A? There's a question I want to ask there.
Okay.
Okay. Okay. Sorry. Okay. I was thinking this 12% is for salary, but I just saw that it's for insurance.
So 12% insurance is going to affect that wages too. 12% of 6.720, it will give you 0.806. What is the new rate for pension?
15%.
So 15% of 6.720. That will give you how much?
1.008.
At the end of the day, in these wages, in the question given to us, look at the wages. They have salary under the wages, insurance, pension. After they get that, there is an amount too called overtime that they used last year. Do we have any note on overtime in this current year? What are we told regarding overtime?
But sir, in the question, they also gave us figure for insurance and pension. But what we are using to calculate now is the figure we got when solving for salaries for the 5 employees.
They gave us figure, but they used a rate last year. We are giving the rate in this year. We will use the rate. Take, for instance, national insurance rate for last year is how many percent?
10%.
So how they get that figure for insurance under the wages? 10% of that salary under wages.
Okay.
Do you understand?
Yes,
Hello,
I
sir.
understand. Yes, I understand.
Hello, sir. So this was the
Yes.
same information we use for salary now.
Yes. You know, pension and insurance. Pension and insurance will be the same rate. Take, for instance, in practice, the pension rate, 10% for the employer, 8% for employee. Anywhere you want to compute pension, you have to use that 10% or 8%. It's the same thing. So this pension now, this wages now, there is no overtime. In the question, we are told that there will be no overtime. So overtime is 0. That means your total wages is going to be 8.535. 535. $8.535. That is your wages. So let's go to the solution. You have got your salary, you have gotten your wages, salary plus wages, 18.553. Overhead, the other overhead, 23.901. The total expenditure is going to be 42.454. From that 42.454, you will now less income. Income is 72.201. Once you less it, the balance the net expenditure. You're supposed to have net surplus or net income, but we can't have it. Why? Because expenditure is more than what? Expenditure is more than income. Do you understand? Expenditure is more than income.
I
So
didn't
when
get
you
this
remove,
last part you said now.
see, what is the total expenditure?
42.454.
What is the total income?
17.201.
So we can see difference between income, the expenditure and income. It's called what?
Net expenditure.
Yes. I said, assuming the income is more than the expenditure, we will have net income, Abby.
Yes, sir.
So that is it on this question. Do we have any question regarding this? Any question? So in the absence of no question,
I have a question. There is a note that we did not make use of. Can you
which
go to the
note?
additional
Which note?
information? So where they have director MOH would not be due for social officer will earn annual increment of 0.88 million.
We have used it. Why computing salaries? We have used it. Why computing
Okay.
salary?
Okay, sir. Okay.
Any other question? So in the absence of question, we can call it a day. But I don't know, by tomorrow in the evening, do we have a free time tomorrow so that we can finish the budget tomorrow and move to another topic by next week? Please try to talk to the admin, Mr. Wasil, to fix a lecture from 8:30 tomorrow to 9:30, just 1 hour, so that we can look at the other area of the budget. So that once we have looked at the other area of the budget, our next lecture, we are going to move to the fresh topic.
Do you mean 8:30 in the evening?
Yes.
There's a class for that period. There's FR. There's FR.
I'm talking of tomorrow.
Yes, there's FR
Yes,
tomorrow.
7 to 9.
What about today?
Today too, there's a class.
What is the free time we can use and finish this budget?
Except you pick between 5-6 tomorrow. I think there is a free period between 5-6.
5-6. By 5-6, I will be on our VI center. I will be holding lecture.
Okay.
So what do we do? What about during the week?
Check your schedule and send us message.
During the week, I always have advanced tasks on Thursday. Aside from Thursday, all the week I will be free in the night. Only Thursday I do advanced tasks.
We have FM on Wednesday night.
We can do voting in the group. So okay.
So, what free period do you have during the week?
Friday.
Friday. Please, let's visit on Friday. I will be available. I will take my time on this Friday.
So that I can
finish from 8:30 to 9:30. Just 1 hour. Okay. I don't want to waste your time since you have lecture in the next day.
That's fine.
So it's fine. 8:30 to 9:30. Please talk to
Yes.
the admin. I will talk to the admin myself too, so that we can fix it, we can achieve a lot. 8:30
All
to
right.
9:30. So thank you.
Okay, sir, please send us this material. Yeah.
8:30 to 9:30. Is it on Friday?
Yes.
Yeah, Friday.
This material, we have it on our group already now. Abby?
Yes,
Yes,
we
we do.
do.
Please, let me reshare it for those who don't have it, so that they can have access to it.